Today, we're going to talk about how to boost your credit score in 30 days. So today I'm going to share with you all of the methods that I've learned over a decade of helping people get their credit to a better place. There are many strategies you can use to get to a better place with your credit. Some of those tricks that you always hear aren't really effective, if they're even effective at all. But there's some tried and true things that are highly likely to boost your credit score in a short amount of time. And of course, this is always dependent upon the individual's credit score as far as which one is going to be the most effective for your situation. But you won't go wrong trying all or some of these things I'm going to mention. Then you'll be able to qualify to get the funding you need for your business, or get a house, get a car, whatever it is that you want to improve your credit for. So first and foremost, let's talk about some of the things that hurt people's credit score and how long they usually affect a person's score, so that you don't do like most people and sit up there concerned about things that really aren't a big concern. Or alternatively, aren't concerned about things that are a big concern. Now, the number one thing that most people go to first or that they focus on is inquiries. Now, inquiries don't drop your score significantly, and they only affect your score for 12 months. However, when you're trying to get funding for your business, and in some other instances, if you have too many inquiries within a short period of time, it can affect your approval, even though it's not really affecting your score. So if you're trying to get funding, you really don't want a bunch of inquiries within the last 12 months. I would say probably no more than 5. And you really don't want more than 3 within the last 6 months. And again, this may not affect your score much, but it can affect your approvals for funding. And if you're trying to get a house, they might ask you a bunch of questions about the inquiries that you recently had too. Now, the next thing we're going to talk about is your utilization on credit cards. Your utilization on credit cards can affect your score by a lot, especially if you go past 30% utilization. But the good thing about utilization being the negative effect against your credit score is that your score can change back rather quickly, and we'll talk about that in just a second. But just know that that isn't a long-term damaging effect unless it's going to take you a long time to pay it off. Now let's talk about late payments. Now, late payments can also severely damage your credit score, and unfortunately, those can last a lot longer, especially within the first 12 months. The more recent it is, the more it damages you. Outside of that 12 months, it damages you a lot less as far as your score goes. Then when you start getting closer to 24 months, you start to barely feel the effects of it. So late payments are really severe, and they can last a longer time as far as the damage that they do to your credit score. Now, other than that, collections and charge-offs are going to be another significant effect to your credit score. The collection, as long as it is present on your credit report, the longer it is going to damage your credit score. And of course, as you know, that can be, up to 7 years that can stay on your credit. With charge-offs, they affect your score more when they first happen, and they start to lessen in damage as time goes by. So similar to the late payments, beyond a year and then closer to 24 months, they don't affect you as much. But if you pay a collection or a charge-off during the time that they're on your credit report, you will immediately see a negative effect. That's why paying them isn't usually the best option unless you really have to. Now, something else that most people don't know is that paying off a loan will drop your credit score, but that drop is a temporary drop. So if you pay off your car loan, look at your credit report maybe within the next 30 days, or look at Credit Karma. Once it hits that it's been paid off, then you will see your credit score drop, and that's because the account closed. Closing accounts hurts your credit score. Even though you did a good thing, it's still a closed account, and that's just how it affects your score. But luckily, it's temporary, so you can recover from that rather quickly. So now we talked about the most common things that are usually affecting your credit score and how long they might usually affect your score. Now we can talk about what it is that you need to do that is the fastest things that you can do to get your credit score to increase within 30 days. Now, if you're getting value from this video so far, before we get into that, I want you to go ahead and give the video a thumbs up if you're getting value, so YouTube can know this is a good video to show to other people. It only takes like 3 seconds. Hit the thumbs up button for me, unless you really don't like the video so far. But if you're still here, you must like it. Okay, now one of the first and easiest things that you can do to see an improvement in your credit score is if you have a credit card that has a high utilization, I'm talking above 30%, then getting that thing down to closer to the single digits is going to be the best thing that you can do for your personal credit score. People usually see significant increases from this, and it usually only takes about 30 days. The only time it might take 60 days is if you paid it off after the reporting cycle. They've already reported your balance to the credit bureaus, and then you paid it. Then, of course, you have to wait for the next cycle to come, which is a 30-day cycle. So, within 60 days at least, you will see that change. But that's why it's important to know when is the statement date for your credit card. Or on some reports, you might see the reported date. Now, the next fastest thing that you can do to see an increase in your credit score is if you don't have any credit cards, go and get yourself one. A lot of times people avoid getting credit cards just because they're scared of debt, and they end up hurting their credit score because of that. Trying to build up their credit using personal loans or secured loans, go and get them, pay them off, and get them again. But I told you paying off loans actually drops your score, so that's not the way that you want to build credit. If you don't have any credit cards, go get yourself a personal credit card and you will see a significant increase in your credit score within that first 30 days. Again, unless you miss the reporting cycle, and then it might take 60. Now, the next fastest thing that you can do to see an improvement in your credit score is to get a negative account removed from your credit report. I'm talking a collection or a charge off or even a late payment. Now, the best way that you can get something removed, or really the fastest way that you can get something removed, is to dispute that item. And I'll talk about that in just a second. But in some instances, because of laws that passed a few years ago, if you have certain medical collections that meet the qualifications, if you pay those medical debts, it can be removed. And most collection companies won't do this, but some of them will delete an account off your credit if you pay them. Again, you would have to call to see if they're one of those companies that do. Most of them don't. But if you have one of the ones that do, then that's one of the fastest ways to get that item removed, and only pay it if they're going to actually remove it from your credit. Because if you pay it and they don't remove it, as I mentioned earlier, it's going to drop your credit score more. Now, I mentioned disputing, and disputing is one of the fastest ways to get something removed off of your credit, because other than that, you're going to be waiting, maybe a year or two before it's not affecting your score in some instances, or you'll be waiting 7 years for something to fall off of your credit. And most of us just don't have that kind of time. Now, disputing doesn't have anything to do with if the account actually belongs to you or not, and it doesn't have anything to do with saying the account isn't yours. The most effective ways are very tactical, but there are practical, easy ways to get it done. Now, if you want to know exactly what to do to try to get these items off of your credit by the disputing route, go check out this video right here and you'll learn everything about that. But if you got that pretty much down pat, and at this point, you're just trying to make sure you have your business properly set up, entity-wise, having the proper structure for getting approvals, you're going to check this video out to learn all about that. And I'll see you guys in the next video.